Porter, in 2011, you made a 77-minute video that has reportedly generated over $200 to $300 million. And I know that it had gotten hundreds of millions of views before it was deleted. It's the highest grossing VSL that I can find.
No one had ever done this type of media before. We didn't know what to call it at the time. Now it's called a video sales letter. That terminology didn't exist.
You really pioneered it. Now entire marketing agencies are just copying what you were doing in 2011. I mean, it's spectacular.
You can turn that $4 million asset 4 or 5 times each year. You can survive on a much lower convert rate. Something about the VSL format, because it was so new, got us into the mindset of people that this is definitely true. You had to watch the whole thing at one sitting, and then you would not get the offer page until the end. The iPhone was going to be a great, enormous ecosystem and a huge hit. You have to have at least one person on your team who is a copy savant. All copywriters are complete weirdos. They're very difficult to deal with, and if you want to be successful, you have to find one that you can tolerate.
Porter, in 2011, you made a 77-minute video that has reportedly generated over $200 to $300 million. And I know that it had gotten hundreds of millions of views before it was deleted. It's the highest grossing VSL that I can find. And so first off, thank you for letting us hear at your wonderful place. And so what I wanted to go over was the strategy on that video as to like how you grossed so much revenue from it, and then how to grow a info product / direct response business, because you took your company public. It went almost $5 billion in market cap. Congratulations to you on that. And so I'm really, really grateful for your time here today.
Okay, so the famous End of America VSL, we didn't know what to call it at the time. Now it's called a video sales letter. That terminology didn't exist. So no one had ever done this type of media before. But I had seen someone do what we called a scribble, which is where somebody took a piece of written sales copy and they had an artist draw on just a plain white background with a black line images of what was being said. So if you said something grew 500%, the artist would make a chart that showed 500%. And I saw that kind of advertising was beginning to work online, that people wanted to see something as well as hear something. And so one of our copywriters, and I honestly forget who it was at this point in time, showed us this, one of those marketing companies that sells marketing. That's never really made any sense to me, but and there's lots of those businesses out there. We'll teach you how to market. And teaching you how to market and selling you that, we're actually demonstrating that we know how to market. So one of those companies had done this. It was the first time I'd seen this done. And they just simply took the words they were saying and typed them onto the page and then read them to the audience. And I kept seeing that ad, which meant it was working. So we had been working on this direct sales letter, which we called the End of America. And it was about the radical things that might happen in America going forward because of the government's decision to print a whole bunch of money to bail out the banks. A whole bunch of money, much like they did during COVID, by the way. Anyways, I'd done a whole lot of homework on that, on the economics of it and what was likely to happen socially. So I was predicting a big rise in political violence. I was predicting that that United States would lose its AAA credit rating, which is a big deal for finance people. I was predicting you'd see a huge rise in gambling and prostitution. So look, we got the Occupy Wall Street movement. We lost our credit rating. The state prohibitions on online gambling have disappeared, and OnlyFans has sprung up. So now virtually everyone under the age of 25 is either addicted to gambling, a prostitute, or a part of the what is it called, the Antifa movement, where they go around and beat people up because they don't like their politics. So I think that a lot of the things I wrote about in that video have come true. And I think that's a big part of its success, because when people heard it and saw it read to them at the same time, it resonated with them very deeply. I was able to put words into people's mouths that was what they were feeling, but they did not know how to express. And one of the things that a good copywriter will teach you is you want to be talking about ideas that are still a little bit taboo. It was pretty clear that all the things I was saying were going to happen, but nobody of any position of authority was willing to say them yet. And now all of those things that I talked about, they're all common knowledge. Everyone knows that's what happened. But at the time, people really didn't quite understand what was going to happen by printing all that money, and they were very afraid of it. So there are several different moving parts that led to the success of that. One was the content was just edgy enough and was very emotionally driven for people. And then two, everyone was afraid because we were going through a really uncertain time in the country. And then the third, and by far the most important thing, is it was a brand new kind of media. No one had ever seen an ad like this before. And the results were tremendous. It was about an 18-fold lift to response rates. There was one other time, there were a couple other times in our industry's history where new forms of media had led to enormous growth. And one of them, ironically, was all the way back in the 1970s when someone first printed a book and put it inside a regular envelope and sent it to people. And the people who got the envelope thought someone had actually sent them a book. And there was even a little lift note on it, usually that looked like a little Post-it note. And it just said, "I really think you'd love this book, Jay." And so like people were like, "Oh, I wonder who's Jay? Who, you know?" And then they looked at the book. And that gimmick, if you will, or that strategy led to a huge growth in the financial newsletter business, enormous. And so we did those bookalogs for a very long time, for the next 20 years. And this VSL breakthrough, this idea that you could do a video sales letter with words and sound, was the equivalent or the next stage of that bookalog kind of breakthrough. It was the first time anyone had ever seen it, and the results were astounding.
Yeah, I mean, it is probably the highest grossing VSL. At least, I mean, you're the first person to do it. You really pioneered it. And now entire marketing agencies are just copying what you were doing in 2011. I mean, it's spectacular. What was the offer and how did you really close the sale when people had already committed to watching? You placed yourself as a position of authority, that you showed that you were looking at the 2008 crash. You were telling people how they felt and making them emotionally connected in the video. What about to actually closing them to join Stansberry Research?
Yeah, there's a lot of things that are involved in producing credibility. I had a lot of very well-known and highly lauded investment calls. So I was one of the people, like the folks in The Big Short, who had been aggressively shorting the investment banks that were involved in mortgage finance. So we shorted Fannie and Freddie, we shorted Lehman Brothers, we shorted Bear Stearns. We had done so very publicly, and a lot of people knew that we had saved a lot of people a lot of money in 2008. So I had a lot of personal credibility. And then, of course, we had lots of textual credibility. Anything that we said, this is something that if you study any of our marketing, you'll see. Any claim we make, we cite a very respectable source. So it's not just that, well, people are saying, it's that, this eminent economist says, or this historian says, or we're looking to cite everything so that when you read it, you can know that it's not just flim flam. So there's that kind of credibility. But honestly, I think the medium itself at the time, because it was so new, I had many people refer to it as a documentary. They would say to me, "Porter, I loved your documentary." And I was like, "I don't remember making a documentary, but thanks." I'm not sure why, but just the addition of having somebody read to you the words on the screen gave it much more credibility in the minds of the viewers. Kind of like the difference, I'm not sure if you feel this way or not, but if you read something in a magazine, it does not have the same credibility with you as if you read something in a book. And if you read something in a hardbound book, or you read something with a book that's like from a university press, like there are different levels of credibility in your mind. And you go, that may be true, that's probably true, or that's definitely true. And something about the VSL format, because it was so new, got us into the mindset of people that this is definitely true. I don't know why. The other thing that adds a lot of credibility is just length. We were talking about this earlier, and you said there's no such thing as something that's too long or too short. There's just something that's not interesting enough. Well, this thing was 77 minutes long. So if you got to the end of it, it meant that you were pretty emotionally committed to those ideas and to that content. And so that makes conversion pretty easy. And as I recall, we didn't offer the ability to control the video at all. So you had to watch the entire thing. There wasn't even a pause button. You had to watch the whole thing at one sitting, and then you would not get the offer page until the end. And the offer page was a standard newsletter offer. It was, I believe, it was 1 year at $99, or it was 2 years for $149. And that offer was pretty standard at the time. And as I recall, we sold something like 100,000 of those offers in the first 6 months. And that content later ended up on television, some of it, and driving people to the video on TV. And from those TV ads, we were able to add paying customers for $2 a name. Yeah, it was a very good year. You could say that this farm is the house that the End of America VSL built, and you're not wrong.
Wow, that is a remarkable story. And so you've actually built one of the biggest info products in the entire world. And so I was wondering, let's take from a personal perspective, I would like to hear the full journey. If you were starting over from, let's say, $0 to $50,000 per month, then we'll transition from $50,000 to $250,000 per month, and hopefully get to how someone can build an info product to over $1 million per month, and kind of what that process would look like.
Well, it's a different world today. The world I got started in, you had to actually print things and mail them to reach people. So there was a really high capital hurdle to being in the info product space. And as a result, there weren't as many info products. They were more expensive. And there are really only 3 or 4 reputable publishers of info stuff. So I began my career working with Bill Bonner at Agora, who was probably even then the leading copywriter and financial publisher. So if you wanted an info product and you wanted it to be finance, you're going to go to Bill or one of his 3 or 4 competitors, but Bill was clearly the best. And working with Bill, I learned how to write copy. I learned a lot about the audience. And of course, I learned some things not to do. There were some mistakes that I could see clearly that Bill was making. The biggest one was, it's hard to believe this is true though, he didn't have in-house copywriters, and he didn't have in-house customer service. He farmed those things out. Well, farming out copywriting is very expensive, and it also leads to relatively low quality copy. I believe having a copywriter that is invested in a brand or in ideas, their copy will successively get better and better and better. But if you just have a guy who writes a package for you once every 5 years, you're not going to get those incremental improvements. So we always had in-house copy, and we always had in-house customer service. And in regards to the in-house customer service thing, getting people to buy an info product at a couple $100, it requires a lot of marketing spend. It's very expensive to get those customers usually. Now, when you have the End of America VSL and you get your acquisition cost down to $2, that changes. But in general, it was costing us at least a couple $100 to get a customer. And if you spend so much getting a customer, why wouldn't you spend $5 or $10 servicing them so that they renew? And so those were the things that I kind of figured out about the business. But in terms of getting started, I still would strongly recommend that you serve at least a 2-year internship with someone who is in the space, because there are so many little tiny things that end up making a huge difference into whether or not you make money. And that is especially true in the marketing and in the offers. Much of the success or failure of an information product business will come down to simply offer. There are offers that work and there are offers that don't. And if you have to spend your first 5 years trying to figure that out, you're not going to make it. So I would recommend that you do some kind of an internship or work for somebody in the space, even though there isn't much of a capital hurdle anymore. The second thing that I would suggest that you do is, as quickly as possible after you launch, you want to make sure that you can acquire 3 skill sets. Now, maybe you can perform 1 or 2 of these, but most people can only perform 1. That is, you want to make sure that your marketing is as good or better than any of your competitors. What does that mean? It means that you have studied all of their marketing, you've studied all of their offers, you understand their reply devices, you understand where they are marketing, what lists they're using, who their affiliates are. You have to know all of that before you start, or immediately thereafter. And why? Well, because you're going to have to build an affiliate network of your own, and you're going to have to know what the customers are used to seeing in terms of offer so that you can make a better offer, because you're going to be a new entrant. You're going to be a competitor. All right. The second part is harder than the first part. The first part's actually pretty easy because all these businesses live in glass houses. You get to see everything. You get to see the product. You get to see the marketing. You can figure out who the affiliates are. Like, none of that's hard to do. So pretty much your average monkey can do part one. Part two is a little tougher, but it's not impossible provided you have capital. The second thing is you should take the time to make sure that the content that you're producing is both niche and good. Why niche? Well, if you want to start from scratch and your idea is that you're going to write about the S&P 500, the most commonly held stocks in America, the most widely followed, you are now competing with every investment bank. You're competing with every newspaper. You're competing with every magazine. And you're competing with all of the biggest investment newsletters. You're basically competing with everybody. But if you specialize in agricultural businesses in the Philippines, you're competing with nobody. And there are people who only want to invest in agricultural companies in the Philippines. There might only be 10 of them, but you can get all 10. And no one's going to even notice that you're creeping up on them. Now, that, of course, is a pretty big exaggeration. But it's not an exaggeration to say that there are not very many high-quality investment groups out there that are writing about very specific strategies. So figure out what that specific strategy is and become the owner of that space. Have the best data, have the best writers, have the best ideas, have the most comprehensive work, be what that is called the axe in that space. And of course, it helps if that space is growing and growing more popular. So, right now, it would be AI. When I got started, it was the internet. Really, when I got started and with Stansberry's Investment Advisory in 1999, most investors did not have any idea how the internet was going to change the world. By focusing just on that one idea, I was able to get a lot of business and get started pretty quickly. Today, if you knew all about the 100 or so companies that are involved in the AI build-out, and you had some idea about why a certain approach was going to be more successful than another. In other words, if you had an idea edge, you could build a very big business very quickly, because right now everybody's looking for that answer. Okay, look, Meta is spending $50 billion. Microsoft is spending $50 billion. Tesla or whatever Elon Musk's company is spending $50 billion. The guy from SoftBank is spending $50 billion or $500 billion or whatever he says, with Starlink or whatever the thing is that they're doing with Trump. Anyways, all these people are spending all this money, but how are they going to make a profit? And which one of their products is going to be differentiated? And who's going to win? And then, of course, who are the suppliers? So if you figured out the iPhone was going to be a great, enormous ecosystem and a huge hit, you could really do well by focusing your stuff only on that. I'm just going to write month after month about the build out of the Apple iPhone and its ecosystem. And you would have had the whole world come to your door, because that was the biggest idea in investing for the last decade. So try to find a big idea that's still a niche and become the axe in that space. Now, I said pretty much any monkey can copy marketing. It's very difficult to do that second part. To that second part, you've got to have a pretty big brain, and you've got to read all the time, and you've got to be a very rational, perceptive person. What I see almost all the time is that people want to get in this space because they don't want to have a real job. They want to have a lifestyle business. And what'll happen every time is they end up writing about whatever it is that they like to do as an investor. Oh, I really like doing covered calls because it's really easy. You just do this and then you go back to the pool with your girlfriend. And so they don't understand that, like, writing these products isn't an avocation. It's not something you do just because you like it. It's something you do very scientifically, very specifically to get a very specific audience. It's not by accident or by chance. And if you go into that, you should know that the market content that you create, the niche that you go after, that is the most important variable. Why? Well, because everybody can copy everybody else's marketing plans. That's not hard to do. There's no moat there. But being the axe in the most important space in the market is very difficult to copy, almost impossible. And so be prepared to invest heavily in your space. And then, of course, make sure you do a good job of picking the right space. If you pick agricultural stocks in the Philippines, it's not going to work. If you pick something like junior mining stocks that nobody ever wants to own, it's not going to work. And if you pick something that is too commonly followed, like the S&P 500, also not going to work, too much competition. So you've got to find that right niche. And then the last part that you have to get right to be successful in this space is you have to have at least one person on your team who is a copy savant. This is someone who reads every bit of copy that gets produced anywhere in the world, figures out why the best copy is working, and figures out how to knock it off to make it work for your products. And copywriting is an entirely separate game than the rest of the marketing and the publishing. It's just very, very different. And you will find that all copywriters are complete weirdos and that they're very difficult to deal with. And if you want to be successful, you have to find one that you can tolerate. All true.
So you were saying how important it is to create an incredible offer and how that will make or break someone's launch. What goes into making a great offer?
I think the key for a great offer is you have to find a way to best utilize the reader's interest. If a reader is really interested in a topic, like people have been in AI for the last 18 months, they're very likely to convert. So then the question is, what kind of business do you want to have? If you're going to have a high volume business, then you have to have a low price. If you're going to have a low volume business, then you need a high price. And so you really have to know what it is you're trying to accomplish by your offer. You also have to understand that price is definitely the most important variable. So for you guys who don't know marketing basics, it is pretty basic, but I'm usually surprised by how few people know this. So there are 4 things that will dictate whether or not your marketing campaign is a success. Do you know what the first of the 4 are?
What?
The first is list. All right, you can have the best copy in the world. You go out to the wrong list, it will not work. Likewise, you can have the worst copy in the world. You go out to the hottest list in the world, it'll work like gangbusters. So list is the most important variable. And the second most important variable is price. So if you go out at a price that's way above market, or you go out at a price that's way below market, you'll see either a greatly reduced response or a greatly increased response. The trouble is, if you go out and you sell something that most people are used to paying $100 for, and you start selling it for $10, who are you going to attract? You're going to attract the Walmarts. You're not going to attract the Rolexes. So you know, price is a really interesting and dynamic variable. But the first thing you have to do is you have to match the price to the list. If you go out to a list that only buys stuff at $99, you're not going to sell anything at $500. If you go out to a list of people who have bought at $1,000, well, now you've got a very wide range of stuff that people will buy, right? But you just have to know list is most important, then price. And then the third thing is offer. And offer incorporates things like guarantee. It incorporates things like payment plans. It incorporates things like bonuses. The offer is very, very important. And then the last thing is copy. Well, wait a minute, Porter. Didn't you just say that you have to have a weirdo copywriter on your staff and you have to treat them well and all that? Yes. Why? Well, because everybody knows what the lists are. Everybody knows what the price is, and everybody can see what the offers are. The only part that can't be copied is the copywriting part. So even though it's the least important variable, it's the only one that you can really differentiate. And so therefore it becomes the most important.
Do you have any examples of great marketing campaigns that you've run?
How much time you got? Yeah, of course. I don't know. I mean, we have books and books of these things that we've done in the past. Yeah.
Okay. Do any come to mind that you would be willing to share?
Oh man, I could sit here all day and talk to you about great leads. I think that one of the things that makes a great publisher, or as you would say, maybe, what is the space called now?
Info product.
Info products. Yeah. So what do you call an info product entrepreneur if not a publisher? I'm not sure. But we're talking about the same people. I think the thing that really differentiates the average info marketer from a great info marketer, or an average publisher from a great publisher, is that I can hear an idea, and it's just like when you hear a hit song on the radio for the first time. You go, oh, that's a hit. Holy Moses, that thing is going to blow up this summer. You just know it. And I'm not a music producer. I don't know anything about music. I can't read music. I can't sing music, nothing. But when I hear a hit song on the radio, I fucking know it. And when I hear a big idea in the info space, I go, oh, man, that's a big idea. And what's fun is I love to go to meetings with other info publishers and other financial people, because very often those folks don't realize what they've got. And I remember one time talking to one of the wealthiest investors in the entire world. He's like Rain Man. He is autistic, and he is so autistic he can hardly speak. And it's like Wapner's on a floor and his head's always moving. Okay. But he started by investing his paper route money in 1972. And now he's worth more than $1 billion, and he lives in Monaco. So even though it's hard to listen to him, I listen to him very carefully. And this is back in the early 2000s, 2003, I believe it was. And we were having a meeting in this luxury resort in Florida called Amelia Island. And we were talking about how there was a devaluation race going on amongst the major currencies. And this person was saying that he'd been buying the euro, and that he was going to be switching out of the euro into gold, because he was convinced that gold was going to have a huge run because all the major currencies were devaluing and gold would be all that was left. And I was trying to figure out how to explain gold to a layperson, just to a regular schmo who doesn't understand currencies or interest rate differentials or any of these things. And we were talking about how the great families in Europe have always held gold and how that has protected them. And people forget that Europe used to have like 25 different currencies. And so it was really common, if you're a wealthy person in Europe, to have gold, just because it was more convenient than trying to constantly convert currencies anytime you had to travel. So anyways, so I was telling to Chris, I said, oh, so he said to me, he said, yeah, it's kind of like a secret currency, but only for rich people. And I was like, what? Say that again? He's like, well, it's kind of like a secret currency, but only for rich people. That isn't actually how he said it, by the way. It took him like 30 seconds to say it, and his head was moving. And I'm like, a secret currency for rich people. And I said, Chris, do you want to use that as a lead idea? And he was like, no, it's not really a secret. Everyone knows what gold is, and blah, blah, blah. And I said, well, maybe we'll use it. He said, that's fine. And so I wrote a package with Mike Palmer for Steve Sugarroot called The Secret Currency. And we explained all the things I just talked to you about. And that package sold something like 100,000 subscriptions in about 6 months. And it was just a powerful idea at the right time. We had another package like that was called Portfolio Repair. And this was in like 2002 when everybody was really hurting because there was a bad bear market. A lot of people lost a lot of money in the stock market. And I was sitting on a plane one day and I thought, what would our subscriber most like to hear? If I could tell him anything. I said, I'd tell him there's a government-backed portfolio repair program, and it's making some investors 16 to 18% a year, repairing all of the damage to their bear market losses. And then I called Sugarroot up. I'm like, hey, here's what we have to come up with. We need something that's like a government program. And he said, oh, well, that's easy. That's Annaly. And I said, what's Annaly? And he said, it's a 100% government-backed mortgage company that has a 16% yield. I'm like, oh, perfect. That's it. And that also did very well. Make the Chinese pay was one of my most famous headlines. There was a situation where China had pegged the value of their currency, the yuan, to the dollar artificially low. And the result of that was asset inflation in China, most notably amongst their large oil and gas companies. So we recommended buying this business called PetroChina because it was it's a commodity business. It does, oil doesn't care whether it's pumped in China or pumped in Texas. And so there will be a global arbitrage in oil price and oil company earnings. It's because oil is a global market and the commodity is priced in dollars. So that this company's shares was priced in yuan didn't make any difference. Its earnings were all in dollars. And it was trading at like 4 times earnings, whereas ExxonMobil was at 12. And we said, hey, the Chinese are just cheating. They're inflating they're debasing their currency, and you can make them pay just by buying this dollar-based commodity business that's listed in China. And we did very well with that, and everybody liked the idea of making the Chinese pay, which is still one of, I think, Trump's most popular ideas.
Yeah.
Yeah. So these are all ways of going about it. You have to meet the subscriber where they are. You can't just sit down and say, let me explain to you the way that global oil arbitrage works. No one's going to get through the first line. What you say is, I'm going to make the fucking Chinese pay. Oh, let's do that. And then they don't really even care what you say next, as long as it kind of vaguely makes sense.
Yeah. Yeah, that's incredible. One of the things that we were talking about at dinner last night was the importance of the lifetime value of the customer. And one, understanding that, because then it mixed with your cost to acquire if you can over or underspend your competitors, because you know that you'll make more money on the back end. So what goes down to having a large LTV?
Well, there's a lot of variables. The number one thing is the conversion rate. So how many people who buy initially will ever buy again? That's the most important function in determining lifetime value. And then the second thing, of course, is just mathematically is what's the average price of your converts. So if people are converting at 40% into another $99 newsletter, okay, that's pretty good lifetime value. But if 20% of them are converting into a $35,000 membership, it's a much higher lifetime value. And how you can drive the converts into higher price things really boils down to how well you serve them when they first come in on your initial offer. If people come in on your $99 offer and you get them to buy Apple computer and it goes up 30% a year for 10 years, they'll buy anything you ask them to. They'll be very willing to buy more from you. If they come in and you sell them a junior mining stock that goes to zero, they'll be much less inclined to buy more from you. So it's the conversion rate and then the average cost of the convert.
Mm-hmm. And then actually just having a great product.
Well, yeah, I think that kind of goes without saying, but technically you can forecast what your lifetime value will be if you know what the conversion rate is and you know what the average price of the convert will be.
Yesterday, you were giving us some numbers on how you had a lifetime value of 3,000 back in the day, which is just remarkable. It's when you have, 10,000 members or whatever you have.
Yeah, I'm pretty sure that Stansberry Research has done by far the highest average lifetime value at scale of anyone in the independent financial world. I'm sure that if you look at lifetime value at Bloomberg, it's much higher. If you look at lifetime value at Morningstar, much higher. But in terms of like Motley Fool or any of the other investment newsletter people, I'm certain that we did a much better and bigger lifetime value, than they did. We had something like 100,000 customers with a lifetime value of more than $3,000. So that's a lot.
Yeah. What do you think the big difference between an info product doing $1 million per year versus $50 million per year? What are the main components that you would need to scale, which is kind of what everyone would like to do?
Well, the biggest difference that with what you're saying is definitely going to be capital, right? Because the most important variable is list. And so in order to get $50 million in revenue, you're going to have a huge list or several huge lists or access to lots of huge lists. And if you're just doing an affiliate business and affiliates are typically getting 80 to 100% of the revenue that come from the splits, it's going to be very difficult to scale because your acquisition costs are going to be so large. They're not. It won't be equity acquisition costs. It won't be cash acquisition costs, but it'll still be costs. So that when it comes time to renew that file, I think in my own experience, it's very difficult to produce high quality content and get it renewed when you're giving away 80% of the sale. Very difficult. Doesn't seem like it'd be hard, but it is. So I think the number one answer to your question is just capital. you need to have a big free name acquisition program. You need to know exactly what your cost of acquisition is. You need to know exactly what your convert rate is. And most importantly, you need asset turn. If you've got $4 million in marketing spend, the question isn't just what is the cost per name. The more important question is, how quickly can you get that money back off the street and get it back out again? Because if you can turn that $4 million asset 4 or 5 times each year, you can survive on a much lower convert rate. If you don't, then you have to have a much higher convert rate to do much better than break even.
Yeah, you were telling me the big difference when you start to scale is the cancellations start to increase quite a bit when you're starting to use a ton of volume.
Yeah. Well, okay. So I was just answering your question in the most basic sense. What's the difference between a $1 million campaign and a $50 million campaign? The difference is capital.
Okay.
The difference is how much money you can invest in the marketing. If the question is, how do you scale given the capital? The most important thing you have to remember is that shit does not scale. So the returns that you get from your first 100,000 responses, or first 1,000 responses, or first 5,000 responses, or first 10,000 responses, they will be materially better than when you scale to 50,000, or when you scale to 100,000, or when you scale to 500,000. And marketers will always lie to you. Always. They will always tell you that there's not going to be a big degradation in response or in lifetime value, but there always is both. Always. And so you're a fool if you think that the money you made on the first 10,000 subscribers is going to be the same amount of money you make on the second 10,000. It's not. It will definitely degrade.
Mm-hmm.
So I remember when I did my very first sales letter, it was called the Railroad Package, and it was about the build out of the internet along railroad right-of-ways in the United States. We had an 880% return on equity in 30 days on our mailing. This was a direct response mailing. You got to remember, we didn't get our first response back until about 14 or 16 days. In 30 days, we'd made more than 8 times our print and postage spend. No one ever said anything like it. And so I was like, well, let's mail the phone book. Let's just mail every name we can. How much money we got? Let's just keep mailing. And, you know, that response rate held for the first 10,000 people, and then fell in half at 20, fell in half again at 40, fell in half again at 60, you know, and when we were doing 250, 500,000 piece mailings, the response rate was, you know, or the return on the ROI was all the way down to like reasonable, but like nothing exciting, you know, we're making 20%. So you mail until you get to break even, or you mail until you get to 80% of break even. Depends on what your model is. It also really depends on again, on the asset turn. How quickly are those responses coming in the door?
What am I not asking you about how to grow an info product that I should be?
I don't know. We should ask AI. Grok.
How are you using AI right now with everything that you're currently doing?
I just use it a lot in my own writing and in my own research. It's an incredible tool for people who want to do high quality financial writing. It's like having 2 or 3 assistants at all times, which is really great. It also allows me to be a lot more precise with my numbers, because I can remember things from 25 years ago in the financial markets, but I don't know the exact date. I don't know the exact share price. You know, I know what happened, but I don't know all the details. But with Grok, it's so easy to get the exact day, the time, the share price. All that stuff is really amazing, and very big improvement from Google previous searches.
How do you think AI is going to disrupt the industry over the next 10 years?
I don't know. I think that it's a great question. I really don't know. I think that AI is going to have a hard time telling stories, because AI is great at responding to query, but I haven't seen it really ever be creative. Now, maybe there's a way to get it to do that. But when I try to do things like, you know, write a 1,000-word essay explaining why value investing works better than growth investing over time, it's just gobbledygook. It doesn't seem to have much initiative. But if I ask it, you know, what is the 30-year average annualized return of the Russell 2000 Value Index, it can tell you exactly. And it can tell you how that correlates or compares to the S&P 500, which is a growth index, blah, blah, blah. So there's definitely uses for it, but I don't know that it'll be outright competitive with financial publishing or with newspapers. I certainly wouldn't bet against it, though.
Well, I mean, thank you. So where can people find you now?
Well, I write a daily e-letter that's free. It's portersdailyjournal.com, or you can go to my website, which is porterandcompanyinvestmentresearch.com, and you can sign up there.
Thank you for your time.
Yeah, you're welcome. Thanks for coming.
Yeah, this was awesome. Thank you.
Sure.